Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition. Our focus is on Asian Paints, India's largest paint maker by market share, by revenues as well. That's posted its Q2 numbers. The numbers have been weak and in fact the stock had tumbled about 9% in trade even yesterday as a reaction to that. From the peak, the stock is now down about 25 odd percent. Looking at the continuous declining trend of the earnings front for the 3 quarters that we've been seeing, the stock is at a 3-year low. Let's try and understand from the management as to what has really gone behind the key points that have led to a pressure point on some of the parameters. We've seen the net sales decline by about 5.3% on a year-on-year basis to 8,003 crores in Q2. EBITDA dropped by about 27.8% as well. We've also seen the profit after tax also drop by about 42.4% on a year-on-year basis, and the volumes also post a decline of about 0.5%. Joining in with us is Mr. Amit Syngle, the MD and the CEO of Asian Paints, to give us a sense of what has been difficult for the company to face in this quarter and what's the outlook going forward. Warm welcome to you, Mr. Syngle, and thank you so much for taking the time out. Always appreciate speaking to you on Business Today TV. Just like how I was mentioning, it's the third straight quarter of an underperformance that we've actually seen. We have discussed a lot of concerning factors all across the last few quarters, including the demand conditions. You've also mentioned consistently on the monsoons front and the floods, which have actually caused some kind of a pain. Have there been other factors? There was also the elections part that played their part in the previous quarters as well. What are the consistent pain points that you feel may actually extend even to Q3 and Q4, and therefore we need to be a little bit more cautious, sir?
Overall, what we see is definitely, I think, one of the worrying factors has been the consumer sentiment, and that has kind of really affected the overall demand conditions. We are seeing in the entire industry, which are consumer-led, that this is something which is a weakness which is seen across. Even industries which are construction-led have seen this kind of a demand mutedness in terms of what we have seen in the market. And I think the worrisome thing here is that one of the trend which we have seen is that there is some weakness in the urban centers, which is kind of emerging. While I
Yeah.
think point is that the rural demand has definitely coming up a little bit in terms of what we are seeing. And as we kind of go ahead, I think the biggest kind of constraint which we see is one in terms of how the consumer demand pans out and how the sentiment really opens, despite the fact that we are seeing that there is going to be a stronger wedding season in terms of going
Yeah.
ahead. And we will see some effect of the monsoons in terms of the agrarian economy in terms of what we see going forward.
Absolutely. This is the point that I was coming to, sir. Q3 and Q4 are stronger because there is the festive demand and then there is the wedding demand. At least, is that going to be abating some of the pain that has been seen up until so far in FY25 on consumer space?
So, what we see is that definitely since now the monsoons are over and we see some upsurge with respect to the government spendings on infrastructure and other projects which are happening, we also see the construction industry now opening up to that extent, and the fact that there is an ongoing wedding season which I spoke of. So, overall, I think some of these are very positive indicators which are coming. Good monsoons also augur well for the rural markets in terms of what we see. So I think these are definitely positive factors which are coming in. But kind of when we look at quarter 3 as well, I think we had a larger, longer Diwali last year, so more days of retailing overall, and we have a higher base in quarter 3. So we are approaching the overall demand and everything with a little bit of a caution, given all these factors which are playing up to that extent. Personally, I think it'll take a little bit more time for the demand and the sentiment to really go up in the market.
So your volume decline has been posted after over a decade, sir. This is when a large part of your peers have still managed to pull off a volume growth of about 3 to 4 odd percent. What is the outlook here that you have going forward for FY25?
See, one of the areas which we have to see is that if you look at the overall business dynamics, there is a industrial business and there is a decorative business in
Yeah.
terms of is at a play. The industrial business has done fairly well for us at about 6% value growth in terms of what we have seen, and we have seen for competition as well that the industrial business, which comprises of auto, marine, powder, and protective business, has done fairly well. In some of the competition, it is in double-digit growth as well to that extent. So I think one of the indicators is that our industrial contribution is less overall in terms of the total business, whereas for competition, it is almost about 20 to about 45% band kind of which exists. So I think on a pure play decorative business, if we see quarter two, the band has been closer to about -3 to about 4.5, and we have been at about 5.5 kind of a percent. So I think that is one indicator which is coming vis-a-vis in terms of how we have fared with respect to the competition and the overall market to that extent. As we see it very clearly in terms of going forward, is that we are looking at in terms of what we can do to kind of really get back in the market far more strongly, and a slew of another initiatives which we are doing in terms of playing to the brand strengths is something which we are unfolding as we go forward.
Let's talk about the margins front. So operating margins have been impacted by, you mentioned on the price reductions that were taken last year as well. There have been higher material prices that you're facing and the increased sales expenses. Are these factors going to be continue to impact the margins, and what will be the, are you going to be sticking to the band that you've given us earlier, 18 to 20%?
So, see, currently if you look at H1, we are at about an 18.5% kind of a PBDIT margin in terms of what we see. And going forward, we will get possibly an advantage of the full realization of the price increase which we have taken in quarter two, in quarter three.
Yeah.
We are also looking at a slew of initiatives in terms of from our sourcing and formulation efficiencies point of view in terms of going forward. We are looking forward to a better product mix in terms of what we get. Given all these factors and hoping for, that we are able to get some decent value growths over in quarter three and quarter four, we are possibly aiming in terms of saying that we are able to maintain at least on the lower side of the band our overall guidance with respect to the margins.
Okay. So do also tell us, as far as your international business is concerned, that's also faced a subdued quarter right there. What is the expectation on that front?
So if you look at the global business, there has been currency depreciation largely in Ethiopia, which has also kind of really impacted in terms of both the top line and the bottom line there. In Asia, we have Bangladesh as a weaker country where we've had some turmoil in that country and the sales
Yeah.
have not been up to the mark. So overall for us, Asia is a big business in terms of what we see. In constant currency terms, we would have still grown at about 8% in the quarter to that extent. But in INR terms, definitely it is around base in terms of what we see overall to that extent. Middle East markets have done well for us. And going forward, we look at Middle East and Asia kind of doing definitely better for us in terms of going forward. And we hope to possibly get into single digit overall growths with respect to the global business in the next half of the year.
Okay. Sir, you did talk about your industrial business as well. I wanted to just get a sense, as far as the auto space is concerned, what is your own sense? We've been hearing over the last few months from the earnings from the auto large companies as well on the muted festive demand, and they are facing the same situation as well. Is that also getting reflected in the key segment that you operate in?
Yeah, so we have two or three big industrial segments. So one obviously is auto. Then there is a refinishes business. There is marine powder and protective business overall to that extent. If you see out of this entire lot, I think auto OE business is the weakest at the moment in terms of what is there. We are seeing definitely attention in terms of the auto OE business, in terms of the key auto players, in terms of whom we supply coatings to. And I think that is a weakness which will continue for some time as we see it. There is no immediate surge in terms of what we are seeing. However, in terms of the other components, whether it is the protective or the powder business or parts of the marine business, I think that is something which we are definitely seeing good business, especially, some of the B2B business in terms of what we do with respect to some of the factories and other business. I think that is something definitely which is doing well overall from an industrial point of view.
Sir, as far as the pricing trends go, what can we expect going forward from here? Do you think you will have to continue to resort to giving higher dealer margins and pricing discounts on the products going forward because of the increasing competitive intensity right there? Would you have the levers at all to continue to up your pricing from here on?
See, currently, as I said, we took a price increase in quarter two, and the realization will happen in quarter three. We are really watching the raw material prices very clearly. We've had inflation now in Q1 and Q2 as well. While we see some softening of the prices, the crude price is still very volatile. We know the geopolitical situation in terms of what is on. We would like to really observe that very strongly for some time to see in terms of what actions we need to take on the pricing level. On the other side, we are looking at possibly a slew of measures, a better product mix. Some of the intensity with respect to marketing and sales activities would definitely remain, because we would like to definitely see that we are able to kind of really compete in the market far more strongly and look
Yeah.
at leveraging the brand strength as we kind of go forward.
Right. And on this part again, up until so far in my conversations, what I have gathered from the sense that you've given us is that, competition is something that will keep coming and going. And yet you were very confident of staying put to your market share and continuing to be on the growth path as well. There is a continuous concern from brokerage houses and analysts on the increasing competitive intensity within this pack right now. Do you think, would you have to look at more mergers and acquisitions in this space to continue to be at the top spot?
See, I feel that today, given the brand strengths and given the share we have, I think we are very strong in the market overall to that extent. I don't think so. We need any mergers or acquisitions to kind of really fortify that strongly. We believe in terms of the core brand strength and growing our businesses across various segments across the country. So overall, we feel that we are quite comfortable in terms of looking at it. However, if there are any options which do come in the market, we are open in terms of looking at that in terms of depending on what options are coming.
Okay, I think so. It was Axo Nobel that was looking at some opportunities right there outside in the. Would you be really looking at and keen at some of that aspect too?
So as of now, Axo has not come out with what options they are looking. They've only said that they're looking at a strategic review of the India business in terms of going forward. We do not know in terms of any formal communication which has come in terms of looking at whether they're exploring a joint venture, whether they are looking at divestment, whether they are looking splitting businesses. We don't know really in terms of what they are kind of looking at. I think the situation will become clear once the options are out in the market, and that is something which is a time we would look at in terms of whether those options really meet our strategy going forward or not.
Right. Lastly, sir, you did mention there could be some more interim and near-term pain that we will have to really look at before things get better. Do you have that visibility of by when do you think a reversal or a turnaround starting to happen?
See, as I said, very difficult to say that, and we are really seeing the immediate quarter with caution in terms of which is there. But as we see, I think Q4, we are hoping it would be much better from a point of view of overall demand, because the full realization of the monsoon impact, the rural economy, some easing out of consumer sentiment in the urban centers, government spending kicking off, construction activities kicking off. I think this will take a little bit of time, but I think we would definitely see Q4 onwards some bit of salience coming back from a point of view of demand, and then possibly the year ahead.
Okay, wonderful, sir. Thank you so much for speaking to us on Business Today Television, sir, to explain all these insights from the quarterly earnings. I wish you all the very best for the upcoming quarters and hoping to catch up very soon with you on another edition on Business Today. Thank you so much.
Thank you so much.
All right, viewers, we'll wrap it up at that. An exclusive conversation with Asian Paints top management to detail for us the key reasons behind the underperformance in Q2. Some more pain that could be seen in Q3, and then there could be some signs of full realization of the impact coming through and things starting to look up from the Q4 end towards the new year as well. That should be really looking positive for the company going forward. As of now, the company feels that they're on a solid footing with respect to competition. They're not really looking at mergers and acquisitions at this point in time. However, if there are opportunities, they would also be continuing to be open for it as well. We'll wrap it up at that. Do stay tuned. There are a lot more interesting conversations that will follow on Business Today Television and on your screens.